I made a show the other day, and in the show I spoke about how there's not a long time left in this bull market if we're following the previous cycles. Because if we are following the previous cycles, and this is where we are in the bull market, then it could mean that if we follow the previous bull markets, we've got about 140 days left in the cycle. And if that's true, then that would mean that if we wanted to make real all-time highs, and if we wanted to get an alt season, and if we wanted to get this huge rush that we usually get towards the end of a real all-time highs, and if we wanted to get an alt season, and if we wanted to get this huge rush that we usually, then if we wanted to get that huge rush, then what we'd need to do is we'd need to have a crazy run in the next couple of months. After I made that video, I got a whole lot of tweets, I got a whole lot of comments, and basically everyone said to me, this cycle is completely different. Of course, yes, there's similarities between this cycle and other cycles, but this cycle is completely different. Now, I know there's a lot of noise out there, and I know that in every cycle, we tend to say that this cycle is going to be different. And if you want to find out whether indeed the cycle is different, probably the best place to look is to actually correlate the on-chain data with the macro and make sure that they are painting the same picture. And that's really what I want to do today. I want to take a deep dive into the on-chain data. I'm not going to do it alone. I think I've got one of the world's best on-chain analysts with us, and we're going to dig onto the on-chain data to tell us when this cycle is going to end and maybe even how high we're going to go. So happy 4th of July, specifically if you're in the States. Otherwise, welcome to everyone. And yeah, let's get the show on the road, guys. I was in two minds about making a show today on the 4th of July. Should I take the day off, be with the fam, or should I be with this fam and bring you guys crypto love and crypto wisdom? Obviously, you can see what I chose. So guys, if you're happy about that, I think we are bringing you some love on the 4th of July. We're going to go deep into the on-chain data today. I think it's going to be a lot of fun. I think it's going to be a very cool show. Yeah, and just before we start, I know we spoke about the biggest data breach in history the other day. Remember we spoke about all these passwords and email addresses and everything that actually got leaked from all our favorite providers. We spoke about Facebook, we spoke about Google, we spoke about Apple, and this became kind of scary for a lot of people. And so one of our sponsors is NordVPN, as you guys know, and they've got a product called 𝗏𝗏𝗏𝗏. Now, what 𝗏𝗏𝗏𝗏 does is it actually does troll the dark web, and it trolls all of these black emailing lists and stuff like that. And what it does is it removes your personal information from anywhere. Okay, so pretty much that's what it does. I highly recommend that if you're scared that your passwords have been collected, or if you've been part of this data breach or any other data breach, for $5.83 a month, basically you can protect yourself. I really suggest that if you're doing this, get yourself a VPN, add the little 𝗏𝗏𝗏𝗏𝗏 feature. Probably end up paying like $10 a month, but then you're masking your IP address and you're cleaning yourself off all these databases. And you know what? It's probably worth the $10 a month. If you want to do that while supporting the channel, guys, there's a link below. You can click up to NordVPN and you can get the 𝗏𝗏𝗏𝗏𝗏 over here. Just click on this link over here. You support the channel, and I think it keeps you safe in this crypto cycle. Anyway, so without further ado, let's get into the actual data, the actual charts. Let's talk about the cycle, because listen, if we want to get to the all-time highs around 15th of November, we don't have a lot of time. Like, time is catching us here. And the move better start. And specifically, like the fast move, or the move usually when altcoins run, that move better start. So yeah, let's find out what our guest thinks today. His name is Willy Woo. I've known him for years and years and years. In fact, I think the first time I interviewed him was like 2016 or 2017 on my CNBC show. Willy, welcome back, my friend.
Hey, Ryan, it's been a long time.
Yeah, it's good to, when I was looking at the on-chain, when I was looking at the data the other day, and I was like, I'm so confused by what's happening in this cycle. I'm so confused whether this is going to be a 4-year cycle, whether the all-time high is going to come around November. I was like, where did I get the answers from? And I reached out to our PR lady and I said to her, please just get hold of Willy and just get him onto our show. Yeah, I'm keen to hear your view. So is the cycle the same, or is the cycle different? Let's just get straight into it.
Okay, look, every cycle is different, right? Like last cycle was going to the birth institutions coming into space, and paper derivatives made a huge impact on the price. This cycle, we've got spot dominance coming in from TradFi institutions. That's MicroStrategy, BlackRock's ETF, all these other treasury companies starting to stack, and nation states. So it is different. And actually, can you see the chart right now?
Let me get the chart up. So that's the chart over there. There we go.
Yeah. So you can actually see it in this chart because this line is actually the amount of capital that's been stored inside Bitcoin. We can measure that easily on chain. We can assess when did I buy the coins, what cost basis. So what's different about it? It's just a squiggly line right now, but I can see it's markedly different in this cycle. You see this? Normally it's just flat. It's just flat. And then suddenly you get the breakout and all FOMO breaks loose. That is a signal of retail coming in. That they are very, very FOMO driven. 2017, very much the same. And every cycle prior is like, when it goes vertical. And we haven't seen that. But what we have seen is around the time of the BlackRock ETF, there's a staged, consistent buying by the institutions. There's no sort of FOMO right now. And what we're looking for is this to go vertical, as in the capital going into the network starts to go exponential, driven by retail FOMO. What's different this time is that, look, it takes billions of dollars to move the needle right now. For every, dollar that we put in here in this cycle, we've got to put in 10 now. So I think a lot of this depends on the big boys and institutions to climb vertically. And so I'm not convinced that we'll go absolutely vertical like the old days. But there may be some sort of retail FOMO coming in, and it'll overlay on top of this sort of gradual stage buying that we're seeing right now. And in terms of, you're saying November. Where'd you get that number? November the 15th, right?
I just followed the previous cycle, and I said like the 2021 high was the November 15th high, basically.
Okay. So market tops are really unstable. Volatility is climbing. There's all sorts of interactions where everyone's getting FOMO. It's very emotional. And then you've got to look at liquidity. How much capital is actually coming in? How much money's being printed and spare capital coming into the network? And so it's very difficult to pick the top timing-wise and target-wise, almost impossible. What you see here is a risk model, right? The risk model is taking into account liquidity. This is my measure of liquidity. It's looking at how much capital is coming into the network. It's taking a look at the pricing structure within Bitcoin. You're seeing here like the buy side of liquidity, and tops happen when liquidity starts to drop out relative to how big the market capsizing. So you can see here that in the early stages of the bull, the risk is very low because there's strong liquidity relative to the pricing. And then in the late stages, it starts to chop around a lot. And the bear market starts when we're at 100% risk. And so we have actually triggered into that phase. So you're absolutely right that we're in the later phase of the bull market because we're now in a risky zone. You can consider that unstable. The liquidity is not providing that buy side support for number go up all the time. You can get pullbacks, you can get sharp ones. We're in a relatively nice dip right now in the risk, which means the liquidity's picked up. So I do expect that inside these kind of pullbacks, that increases in liquidity amongst the late cycle. So when you get that pullback, there's room for us to move up. And so I'm pretty sure that we're going to break all-time highs. If you flick to a TradFi view of it, there it is again. This is a traditional markets, the S&P 500 now breaking all-time highs. So we've had a decent pull out of this pullback, and we're now going high. And so that's really anticipation, I think, of money printing that's going on. That's not going on, but is expected to come in. But we need to watch where the top is. And if anyone's been following Henrik Zenberg's work within global macro, he's saying the ship has hit, the Titanic has hit the iceberg. It hasn't sunk. It's filling up water, but we've got a bit of time and we're going to get a blow off top. And so I work with them daily within Swissblock because we do market intelligence publications for institutions now. And with that context, this is data backed within economic forecasts and data that is coming in, we are late cycle, and we do expect this to top. Presently, there's a good opportunity for a market top in September going into October. Now, that is, it's very hard to predict the top. I don't think the cycle is going to be so predictable. Maybe we get to November, December, but if it does not, crash early, I think it'll crash late, maybe March. This is,
But
by the way, yeah.
if we're getting to like the end of the cycle, like I've been around for 2.5 cycles, or 3.5 cycles, and in the first 2 cycles, the end of the bull market was extremely vicious. It was like Bitcoin flew up huge, altcoins shot up like absolute crazy. And it wasn't for a long time. It was for 3 or 4 months, but it was like a crazy 3 or 4 months. If we're at the top, if we're reaching the top of the cycle, we're on the 4th of July now, which means that like we've got 4 months left. Surely at some point now, if we're going to hit a cycle top, which means, cycle tops usually happen when there's euphoria, when there's increased leverage in the system, when there's all the cycle top signs. Like the math doesn't math for me. I just can't reconcile that there's only 4 months left and this market is basically sleeping. Like the volatility is at pretty much at all time lows, or I was looking at the options volatility yesterday. It's very, very, very low volatility at the moment. The retail participation in the crypto market directly, I'm not talking about ETF and through brokers, is extremely low. So I'm just kind of like thinking to myself, well, if this is the cycle, when does the fun happen? Or is it not a fun cycle anymore?
I don't think it's a fun cycle anymore. Let's address this. It's like, again, I said that it's institutionally driven. And actually, that could be a whole lot of Bitcoiners and crypto people selling their assets and buying Bitcoin treasury companies because they have large multipliers on Bitcoin's gains. So you kind of think of like if you're going to be trading crypto, altcoins, shitcoins, whatever, meme coins, anything shitty in a casino, those are the things that move. And they haven't moved this time. And like what's really taking off are things like Metaplanet, MicroStrategy early in the cycle. These things took the attention. And you think about that, that is like a vacuum cleaner of liquidity that's being sucked up amongst the crypto people. They're buying in securities and then they're buying back Bitcoin in a very staged, dollar-costed way. So you could see that as a big dampener on the fun, which is the rampant FOMO and then massive tops and then coming back down. So that is one theory that I think is absolutely happening. I know plenty of...
Yeah, I suppose what you're saying is right. There actually is a lot of euphoria and a lot of hype, but the euphoria and the hype is actually happening on treasury companies at the moment. And so maybe we're just looking for the euphoria and the hype in the wrong place. Like maybe, there is hype. MicroStrategy is okay. Metaplanet is flying, is going through the roof. Tom Lee announced a new company, which is going to be an ETH treasury company. And that thing was yesterday on a $400 million market cap. Hasn't bought a single Ethereum yet. And maybe you're right. Maybe the euphoria is just happening in a completely different place.
Yeah, it's like 2017 all over again, except in TradFi securities. But the capital's pretty much the same. We might be getting a little bit from traditional bond markets. So those guys are buying in a more de-risk staged manner. But I know plenty of people that sold their Bitcoins and crypto to buy this stuff. And so you're recirculating the same capital and putting it into securities. And those securities are buying less Bitcoin than that was actually sold because there's some amount of off-ramping to the TradFi bond holders that are getting a particular preferential deals. So that impact is it could explain this. The other thing is, with the fun within altcoins, 2017 was the fun year, right? 2020 onwards, that cycle was a little less, a little bit by DeFi summer, a little bit of this and that. NFTs, it was a new narrative. This cycle is like, we are just tired of being dumped by the VCs. And retail has been the exit liquidity for the insiders. So, the markets aren't that stupid. We're like, Well, why don't we buy meme coins is what the latest trend is, because we can't be dumped by the VCs. And so those things took off. And so it's the third time, right? And people learn on the third time. And so the FOMO's leaving because people are getting wise to the insider games. And so what we're seeing now is capital flows into institutions that are not playing FOMO games. They're playing staged buying for a long term. Well, most of them you'd hope are more like MicroStrategy for a long term plan. And so that explains that original chart here, which is, look, it's staged. If this was a normal cycle, we would have been flat, 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 and then a vertical up here, but we're actually here, right? Maybe we'd be a bit higher. Some of the capital and liquidity has been sucked out because it's not an efficient buy when you're selling Bitcoins to buy in equity, which is then buying Bitcoin, and some of it's been sucked out. So that's my explanation of it.
Okay. So what does that mean? What does that mean for, I'm not going to call it alt season, but what does that mean for alts running? And specifically, I'm talking about the major alts, Solana, Ethereum, and BNB, and moving down like the big alts. Because the money is much more institutional now, do you believe that there's going to be a flow of money into the bigger alts, or do you think it's also going to be just slow and gradual, slow and gradual, slow and gradual?
We think, we as in Swissblock and myself, working together with the reports and data, is that we think that there will be the rotation. We think that it's going to go from Bitcoin to Ethereum, the big caps, mid caps, and the final pop of the low caps. And that's when we get that run up. It's been that way as a typical, like most markets, you rotate into higher risk assets to chase returns, and usually the end of a probable run is this rotation, and we've seen it every cycle. I think that's systemic to the market behavior. I think we have to scale it down a bit this time. I think alts will run. I just think that it's slightly different now that we've got these big institutions coming in now with taking a lot of the capital out of the system and buying Bitcoin, mainly Bitcoin.
So I have a theory about these treasury companies, and I want to run the theory past you. Let me know what you think of the theory. So the buying right now is taking place from the treasury companies. That's really the big demand. Actually, if I read something correctly, I just want to see if I've actually got that stat. I think that the treasury companies actually landed up buying here. So publicly traded, I don't know if you can see my screen, but publicly traded treasury companies actually landed up buying more. Let me see if I can actually just share a screen quickly. Just 1 second. Second. Just 1 second. I need to just stop sharing my screen here for a sec. Let's see that. Okay. And share that. There we go. Okay, that should work. Let's see if that worked. Okay, so as you can see on this tweet, publicly traded companies have purchased more Bitcoin than ETFs for the third consecutive quarter. So the real bid is actually coming from these publicly traded companies, and most of it's coming from the publicly traded treasury companies, right? So the problem with these publicly traded treasury companies is that they are buying an asset and they are counting on the promise of leverage to pump up the differential between their net asset value and the price of the equity. And that is effectively leverage. Like, I mean, let's just call it a spade. That's leverage. Where you use an underlying asset and you create a premium based on the fact that you're going to take leverage, you're creating leverage in the system, right? And leverage is a beautiful thing if you're in a positive market. But like the two previous crypto cycles, both of them imploded because of leverage. The first one was the ICO leverage, where we created value where value didn't exist. We'd send our ETH to an address, and 2 days later, we'd have 10 times that ETH out of thin air. And in the second cycle, or the Luna cycle, Luna created $100 billion of value out of money that didn't really exist. And when that leverage popped, it deleveraged all the institutions. Genesis, everything, just all the leverage got wiped out the system. My concern is that these treasury companies are creating leverage in the system, and every day a new treasury company launches. And the only differential between whether you're going to invest in the one treasury company or another treasury company is the level of risk they're willing to take, and therefore the returns that they're going to promise you. So if you want low risk, you're going to go to MicroStrategy. If you want high risk, you're going to move higher up the risk curve, right? That to me sounds like a formula which is almost guaranteed to eventually pop. In other words, at some point, one category of these companies is going to start imploding. When they do, the retail investor in the shares is going to get wrecked. Then the companies are going to struggle to understand why they have a reason to exist, because no one wants it, because the leverage is starting to unwind. Nobody wants these companies anymore. And then they're going to start selling off their Bitcoin, because I don't think every one of these CEOs is a 𝗦𝗁𝗍𝗪 who has the same conviction and the same financial engineering abilities as 𝗦𝗁𝗍𝗪's got. And I think that is the unwind that's going to, the leverage unwind that's going to destroy the cycle. So I don't think it's going to happen yet. But I do think we're going to get to a point where there's too many of these treasury companies. And when there's too many of these treasury companies, they're going to start imploding. And as they implode, they're going to start causing a leverage cascade until eventually they all trade under NAV. And then smart money, if there is any money left, is going to be buying these things under NAV and hoping for them to liquidate.
I absolutely agree, Ren. I think there's two types of leverages here, right? One's a premium. We've experienced that with the original Grayscale ETF.
Yes.
It traded a premium and then it traded a discount. That you could call that leverage. I just call that a premium or a discount. And if you're holding that share, well, it feels like your face value, your shares are dropping hard, and it looks like leverage is unwinding. But that's just a premium. Leverage has a downside called liquidation. You lose your asset, right?
Yes.
And you need to look at the details of these treasury companies. If you're a micro-sailor and you're being smart, he's going, hell, I've survived one bear market and I don't want to have that feeling again. I'm going to push out my debt 8 to 12 years now. So in the first bear market, no matter what, no liquidation risk. I'm going, what are the chances that Bitcoin's not going to double or triple, whatever you need to get that price back up over the next 10 years, right? And so that's pretty safe. That's kind of like the most robust debt structuring out of these treasury companies. And then you've got things that are running up 8 times MNAV, and are things like very clever financial engineering like Metaplanet, and they have liquidation risks for sure. If you look at how they're doing it, they're doing Evo fund that's operating like a hedge fund. They're playing spread when the price pumps. They sort of exercise their warrants. They when they exercise, capital goes back into the Metaplanet. They get a little kind of market neutralish yield. They're making money. Metaplanet's getting capital in. It's like an ATM on steroids. But what's happening is that they're taking big tranches of debt. Evo fund takes the debt. They send money back as the market runs up. What happens when the market turns? What happens if Metaplanet does not get, they're not safe when the market turns? They haven't got if they're at zero debt and they haven't done the next tranche, so no problem. But if they've got another $300 million of debt sitting there and the market's turning and Evo fund can't do their spread trade, they're going, hell, we can't exercise our warrants. We can't send money back there. Let's call back our $300 million of debt. And that's going to send all the money back to Evo fund. There's no 10-year window here. It's immediate. It's the maturity says X number of months.
That's the problem.
But they can call it back any day. No one's looking at the debt structuring. So when they call that back, what's Metaplanet going to do to fit that $200 million bill? They've got to sell their Bitcoin. And that starts a cascade. They're going to get liquidated on the Bitcoin if they get caught flat-footed, But they might not. They might be pretty smart because they absolutely bought the bottom of this. Okay,
but not everyone bought the bottom. Maybe Metaplanet, which was, let's say, the second horse in the race, they actually ended up buying the bottom. But there's 10 companies forming every day. There's 21, which was formed. There's Pump just launched a company with raised $1 billion to buy Bitcoin. And there's Tom Lee that raised X amount of money for an ETH company, and there's Joseph Lubin, which raised $425 million for another ETH company. You cannot tell me that all of these guys caught the bottom. Some of them are buying coins today. And so I'm just worried that if there's a frenzy on the stock market and that frenzy in the stock market is getting people to buy crypto, it's going to unwind. And when it does unwind, that trade's going to get unwound and the coins are going to find their way back into the market.
Yep. I think that when this market turns, the absolute pristine collateral on the planet will be short on Bitcoin treasury companies. You're going to get like 8x leverage for free. You don't have to pay that kind of funding rate. And as the MNAVs collapse from 8x to 1 or even below, that's a very cheap short. Your downside's limited because you don't have to put a position on that's very big. And you're going to get 8 times or maybe 10 times, if it's going below MNAV. So yeah, it's an opportunity as well if you want to hedge your Bitcoins and you go, I can, maybe not sell my Bitcoins and put a short at the top. That's hard, by the way, timing the top. But as we're going down the other side, yeah, absolutely, it's not going to be great. And if you're listening to Henry Zberg, we're in a business cycle recession coming. And last time we did that was COVID, and before that was the world financial crisis, 2008. COVID was a massive liquidity injection, and it happened early before COVID actually hit. Now, if you're injecting late, I mean, we're going to have something between 2008 and the Great Depression, right? So that's the worst case scenario. And so all liquidity is going to be sucked out of the system. So Bitcoin, though we're thinking it's much more robust this time because there's less toxicity in the system, relative to the last cycles. Last cycle was pretty bad. We've got a big liquidity extraction that's going to be pulled. A lot of capital is going to come out of risk markets in this cycle, and that could cause us to pull back a lot harder than anyone thinks. There's talk about maybe only pull back 30%, maybe 50%. It's a micro bear market for Bitcoiners who are used to 85% plus pullback. So we've got to keep that in mind.
So that was actually going to be my next question. So given the fact that we're much more institutionalized now, like Bitcoin's not a fun asset anymore. In fact, it's been much more fun to just buy Coinbase or just buy Robinhood in terms of movement of price. And given the fact that we're loaded up into ETFs and we're loaded up into treasury companies, do you think that if we do get into another crypto bear market, do you think the crypto bear market's going to be as brutal as it was before? Or do you think that by nature, the more you institutionalize something, the more stable it gets?
I think in normal terms, yes, you're going to mute the pullbacks. I think it's going to become more stable. Also, we're bigger, right? We're at 2 trillion market cap instead of 1 from last cycle. So it becomes more stable by nature. But then you got to look at what kind of environment we're in. Are we driving up a rough terrain, or are we on a smooth highway? And what I'm saying is the system, this truck called Bitcoin, is inherently more stable. The suspension's good. Everything is robust. But we're about to hit some off-roading. And so it may look more unstable. It's just everything's going unstable because we're driving on a road called global macro now.
And what would you hold in that, at the end of the cycle, what would you like to be holding? Because you're saying Bitcoin's going to go down. I don't think Willy Woo is going to tell me to go into US dollars or treasuries. So what would you like to be holding at the end of the cycle?
The last 2 bear markets since 2018 was my first, my first bear market I was accumulating, right? That was 2014. 2018, I went to dollars, stable coins. The last cycle also went to stable coins. Actually, the last cycle was stable coins and yield, right? It was, we launched our fund of funds, which was market neutral trading. So in a bear market, you might get 5-10% doing arbitrage trades in crypto whilst everything's collapsing. So my plan is to do a bit of that. My plan is to potentially diversify that into lending, like Bitcoin collateralized lending, which is pretty stable, low risk returns without exchange counterparty issues. And then also we have the capability here now to hedge a little bit by sorting things like, I aforementioned MetaPlanet, that's 8x MNAV. So a little bit of that, wouldn't go too heavy, but that's what I'm thinking.
I mean, that short trade is such a genius trade. You take the short, you're leveraged you're taking one short, you're leveraged 8x on the way down.
Yeah. And you have to understand the debt structuring, and you want to understand if they're going flat-footed or whether or not they're robust, and that sort of gives you an idea of how much down pressure there will be. But man, if some of those Bitcoins get liquidated, hallelujah for your hedge. You can have a lot of upside on that hedge. You don't have to put everything in the cash. If you like to be like most Bitcoiners, to hold their Bitcoins a little bit, in that short position. If you know what you're doing, I wouldn't recommend it to hodlers. But if you're in a market actor, it's worth a shot.
Long so towards the end of the cycle, long Bitcoin, short the later part of the treasury companies, because those are going to be the most sloppily structured with the highest amount of debt.
Absolutely. You can do a really good long short there. You could actually, now it's all equities world. You could go long BlackRock ETF, short a portfolio of the weakest treasury companies after looking at their debt structuring. I haven't seen anyone do a full deep dive on all the debt structuring across all of them, but you want to systematically pick the weakest, sort those, long Bitcoin, and that should net out as a pretty good market neutral yield, right? It's like holding cash with a bit of upside.
I wouldn't do it yet. Just for anyone watching, I wouldn't do it yet, because there's still a long way to go. There's still a lot of these treasury companies that have still got to come to market. But I think when we start getting towards the end of the cycle and there starts to be a little bit more euphoria, even though Willie says we probably won't get that euphoric trip, I think that's probably the time that you should be looking to the short. Don't do the short today. I think you're way too early in the cycle.
Yeah, way too early. You're going to get killed, right? By doing the short while holding your Bitcoins, you're basically selling to cash. And so you want to be late. You always want to be late, because it's not clear whether it's a bear market until a bit further into it. You want to wait for the dead cat. Yeah, because the tops are unstable. 2017, we thought it topped at 10,000. A lot of people thought it would top. And then it ran up to 20,000 over 2 weeks, right? And that's how unstable tops are. So, but it was very clear when it dead catted and bounced to 12,000 from the 20,000, it was a proper bear market, and that would be the safe time to rotate out. You don't ever try to capture the top. You can give that money out. You can give it back. You're just risking too much.
Willie, have you ventured into the world of altcoins? I mean, at the time you were very much a Bitcoin guy. Like, have you ventured into the world of actually hodling some altcoins, or is that not the thesis?
No, look, if anyone has followed my work back from 2015, 16, it was very clear to me that Bitcoin was the strongest asset by far after running all the data on it. So 2017, I did, I wouldn't say hodl, I traded in and out of Bitcoin, altcoins. Like, I had only 5% exposure to Bitcoin by the end of that cycle, because altcoins are running up so hard, and a hodl might be 1 month, 2 month, right? That's a midterm trade, but that game's over. And then the next cycle was really, you had to be an insider. You had to get inside deals. Buy Solana at, what was the seed, 50 cents, and went to $200. You have to do that. And this cycle is meme coins, but it's just too frenetic for me. I'm getting old. I'm like, I like to focus deeply in one thing, and the engine house that powers all this is Bitcoin. So I'm just going deeper and deeper into Bitcoin, understanding it as a global macro asset now, which is the first one in 150 years. That's a big thing. It's the first global macro asset that's risen at scale. It's multi-trillion dollars. And so this means that the what is it, depending on how you count it, $900 trillion of global asset wealth is now going to come into this $2 trillion asset, and that's the biggest game in town, right? If you take a look at all this altcoin business and you look at total addressable market, it's going to go from 1.5 trillion to 15 trillion on optimistic level if it displaces vast tracts of the traditional infrastructure. Now, Bitcoin can go from 2 trillion to 100 trillion conservatively. So that's a 50x versus a 10x. So I'm mainly interested in the next 10 to 20 years, how Bitcoin plays out, going from 2 to 100 trillion as the entire economic world starts to pivot and move into Bitcoin and understand it and build things off it.
Wow. Okay. Sure. And when you watch the rate of progress, specifically, I'm watching the rate of progress since Trump came into power. I'm quite bewildered by how crazy the rate of progress is. I mean, if these guys have just come in, they've started signing the strategic reserve, the rails for the strategic reserve. There's the Genius Act, which is pretty much going to be passed. I mean, I don't know, the rate at which things are happening in the US is, to me, astounding. I don't know how you feel about it watching it. You were also around very early. In fact, you were probably around earlier than me. And I just remember how slowly things used to move. And now every week something's happening.
Yeah, it's moving quick. It's moving quick. It doesn't mean all of it's going to happen. Strategic reserve is going to take, between when all the stuff lines up, 6 months to 2 years, because it's got to get through everything. Congress has got to vote on it. Nothing happens at speed with the government, and so whilst there might be speculative market pricing as announcements come, you might get a little wick over the 1 hour candles. We're really looking at maybe a 2-year rollout, and so you got to be conservative over a lot of the stuff. And it doesn't mean the buying hits the markets. It means the infrastructure is in place. The infrastructure for institutions were built in around 2016. A lot of it was built. And then they started coming in using the infrastructure in 2020. So now more legislation, which is like infrastructure, it's allowing things to happen. Like lending's a big thing. Fannie and Freddie saying, hey, all the Bitcoiners out there, the Bitcoin wealth is now taken into account with mortgage assessments for buying a house. That's big, right? It's big. It doesn't mean that people going out to buy Bitcoin. It just means that Bitcoin is going to be useful in the future. And it's going to take time for the banks to figure that out and build their systems to report and figure out risk. And so we're all so fixated, being, trading meme coins and whatnot over 1 minute candles, but these are 1 year candles we're talking about. So it's looking great over the 10 to 20 years, which I'm looking at it as, we're going to track that, but go out to the monthly, yearly candles, yearly 10-year candles that 𝗏𝗏 is doing, because he's got 100-year plan. That's where the big change is going to happen. Not these alley candles. The God candle, like Samson Mao, he gave me that. He's thinking the God candle, but he's actually seeing. He's going around meeting nation state leaders, and he's seeing a lot of the stuff. But I'm seeing how that hits the markets, and it's it's very staged. I think people are overvaluing the news right now.
But I do agree.
Gold inflows, right?
Yeah, exactly. I've been watching the gold inflows. I was actually looking at the gold chart today. Hold on, where did I put it? I'm trying to get my charts back. I think it's over there. Yeah, I've been watching the gold inflows, and I've been watching this. I think you actually said it. I think I actually kept the tweet, Joe, where you said gold fell flat, got dragged, no longer the monetary standard, flawed with vulnerabilities. Bitcoin, as long as it keeps its decentralization, is better labeled as the perfect money for the next 10,000 years. Yeah. So we're talking like Bitcoin's digital gold, but why would we say that Bitcoin is a digital version of a flawed asset? We're really talking about Bitcoin being the next 10,000 years of perfect money. It's secured near perfectly. It's perfectly mathematically, cryptographically secured as scarce, and that does not change when Elon Musk launches his rockets. And there's going to be a commodity mining infrastructure in the next 100 years, right? And suddenly we find there's quadrillion dollars of gold and platinum and commodities sitting on one asteroid, which we have technology to mine. So, gold is actually a 6,000 euro asset that we used as a fair ledger that was robust when one country had this on the ledger and that one had that, and no one could dig it out of the ground at pace. So that's gone now, right? That is leaving. If anyone's looked at the gold inflow from the miners, that is actually climbing. That's climbing. Whenever gold price goes up, it's pumping higher. I would say if you look at the technology landscape, that's going to go absolutely higher and higher.
as we improve technology. And so gold is flawed. It's not going to hold. Bitcoin's secured on energy, and energy is always going to be relatively scarce relative to what's needing to consume that energy, which is AI. You know, like if you want to like cheap Bitcoin, I've got to, you know, grab the world's energy, you know, and it's all being sucked in for whatever it is now. Today it's AI. There's, you know, ridiculous amounts of energy focused on that. How are you going to pull that energy to break Bitcoin's consensus? This will carry on for the next 10,000 years as we become, you know, interstellar species, and we go extreme. So that's the secure money for the next 1,000 years. And right now, the flows into this money is bigger than the inflows into gold.
Yeah,
to paint
100%.
a picture, you know. Yeah.
Sure. What a high to leave it on. Willie, thank you so much, my friend. Thanks for the amazing alpha. Thank you for coming on the 4th of July. Good to see you again. Good to have you on one of our shows. I see a lot of amazing comments. Some have even accepted that you're actually Satoshi. I mean, it's crazy.
Well, thanks for having me, Ray. It's been a lot of fun. It's been good to be on your show. Yeah.
Thank you, my friend.
And anyone who wants to follow me, I'm on Woonomic, and most people probably already know that. But please have a look at. There's a link to the Bitcoin Vector handle, and we are now doing institutional grade reports for if you're a family office, you're an institution. Anyone in the industry that needs a data-backed look at the ecosystem and where the pricing structure is, that report is written for you. We are going to do a retail version for stacking sats. That's going to happen in the next few weeks. So it'll help people guide themselves through the market cycles and to stack sats in a optimal manner. And that'll be backed by over 10 years of research. So take a look at that if you can.
Cool, guys. If you want to follow, there are links below, but there's also with the Woonomic Twitter, and everything goes from there. Willie, good to see you, my friend. Thank you so much. Thank you so much.
Absolutely, Ray. Look forward to next time.
All right, and guys, so I'll probably see you guys again on the weekend, and after that, I'm going on vacation. I'm going to be gone for about 10 days. I will be when I'm on vacation. Actually, because I need to if you need to get updates, obviously I'll be on Twitter, and when I'm not on Twitter, I will be on my Instagram. My Instagram is @CryptoManRan. If you guys wanna follow, that's where I'm going to be doing the updates, because I'm not going to be able to go live from where I'm going. See you guys in the weekend. Until then, trade well, my friends.